All right, people, let's light this thing up. We're diving into the Nomad Investment Partnership Letters by Nick Sleep and Kay Zakaria, and it's a freaking goldmine. I've got 219 pages of this brilliance printed out, dog-eared, and sitting on my desk like a treasure map. This isn't just some dry investor chatter. It's a masterclass in how to think, how to build wealth, and how to live with guts and purpose. These guys kicked off Nomad in September 2001, ran it through 2014, and delivered a 20% annualized return for 2 decades, turning $1 into over $10, while the MSCI World Index crawled to 2. That's not a fluke, that's a system. And the wild part, they did it by betting on founders. Jeff Bezos, Jim Sinegal, Warren Buffett. Guys who don't just run companies, they forge compounding machines that churn value forever. I'm your host, and today we're ripping this apart. How Sleep and Zach went from scavenging beat, up bargains to owning the keys, to capitalism's greatest engines. This is about patience, detective work, and seeing what the herd misses. Let's roll! It's September 10, 2001, page 5, and Nomad launches into chaos. The dot-com bubble's imploding, 9/11's a day away, and markets are about to tank. Nick Sleep, this 32-year-old ex-marathon asset management hustler, teams up with Kay Zakaria and drops their first letter in January 2002 like a quiet bomb. We're hunting businesses trading at half their real value, run by owner-oriented management, with capital allocation that builds long-term shareholder wealth. He writes, page 5. That's the Nomad playbook right there. Value investing with a global twist and a laser focus on absolute returns. They're not here to shadow the MSCI. That index is just a footnote to show how little they care about Wall Street's scoreboard. 4 months in, they're up 10.1%, page 5, while the world's reeling. The MSCI's up a measly 3.9%, but Nick's not gloating, he's hunting. Why expect to beat the index handsomely over time? But only as a byproduct, he says. Absolute returns are the god. Beating benchmarks is just gravy. And they're already knee-deep in picks like International Speedway and Maticon. Page 6. International Speedways, this NASCAR racetrack operator tied to the France family, a gritty dynasty that's consolidating tracks and flipping the script on broadcasters. Media rights double in year one of a 7-year deal. Locked to rise 17% annually through 2007, the stock's at 35, half its $7 peak 2 years back. Nick's drooling. This isn't some average firm. It's a franchise with a moat. Prize money's up 25%, pulling in new teams like Chrysler, boosting viewership, which juices media cash. The market's pricing in 3-4% growth. Nick's seeing a decade-long tailwind. Patience wins here, he writes, page 7. Then Maticon, page 7. Thailand's second biggest newspaper, a family-run tabloid riding a post-Asian crisis wave. Sales are down 1/3 from 96, but cash flow's up 40%. Cost cutting's ruthless. Trading at 50 baht a share, down from 300 baht in 94, it's 0.75 times revenue, 4 times normalized free cash flow, with a 9% dividend yield. 1/3 of its real worth, maybe a quarter of Western peers. Nick calculates. The family's jacked dividends threefold since the TRO, and ad rates are climbing, 20% above the low, still 50% below the peak. There's a long runway, he says. This is scrappy, unglamorous, but Nick's all in. Slow grinds pay big. What's hitting me is Nick's vibe. He's a freaking detective. Page 5. Chris Brown calls it investigative journalism. We agree. He's not just crunching numbers. He's dissecting the soul of these businesses. Most funds are glued to one market twitching over quarterly noise, but Nomad's global. 32.8% Southeast Asia, 23.6% North America, 12.7% Europe, and they're playing a decade-long game. Think Buffett in the 60s, sniffing out American Express after the salad oil scandal. Same hustle, different era. Page 518 investments, 16 sectors, 21% media, and 12% hotels and casinos, 10% telecom. Cash is 28%. He's not rushing even as markets bleed. We're not here to earn fees on cash, but we won't buy junk, he writes. Marathon insiders are the biggest investors. Skin in the game, baby. This is Sleep and Zach finding their footing. Post-bubble chaos is their playground. We don't have to invest in anything that doesn't fit, he says. Page 5. Freedom plus discipline, that's the spark. It's like Sam Walton opening that first Walmart in '62. Small, scrappy, but the vision's simmering. Nick's planting seeds, and they're about to sprout into something insane. June 2002. Page 8. And Nomad's up 14.5% since inception, while the MSCI's down 5.2%. 9 months in, Nick's like, it's a start, but it's noise. Absolute returns are what matter. He's not here to flex over a sinking index. He's chasing real gains. Then he drops this Buffett gem from the 1960 letter. Page 9e. Superior records come from outpacing in stable or declining markets, not booms. Nick's eyes widen. He hadn't framed it that way, but it's gospel. Value investors feast when the herd panics. Marathon's history proves it, and Nomad's early run fits the pattern. Down markets are their wheelhouse. But here's where it gets real. Page 10. Nick peels back the curtain on Xerox, Monsanto, and later Conseco, and he's not afraid to bleed on the page. This is Sleep Raw, owning his wins and flops with equal fire. Xerox, page 11, is a corporate dumpster fire when they buy. Though $17 billion in revenue, 70% of high-end printers, but gutted by late 90s accounting tricks. Management's juicing earnings with sale-type leases. SFAS 13 lets them book profits upfront on 5-year printer deals, inflating equipment value over service costs. Wall Street's cheering 15% EPS growth till the SEC crashes the party. Stocks at 7% of its peak. Credit markets freeze. Nick's like, hold up. Cash flows untouched, $1 billion a year. Customers keep paying. The accounting's just noise. Market cap's $4.5 billion. 4.5 times free cash flow, half is a Fontaine per share estimate. R&D's $100 billion annually. New products are doubling the 90s pace. Debt's manageable with $1.8 billion cash. Trading volume says investors hold for 4 months. They're betting on the next quarter, not the next decade, he writes. Page 12. Nick's playing chess while they're flipping coins. Monsanto, page 12, is the gut punch. Genetically modified seeds, killer growth. Cheap price, Nomad's sweet spot. Then the bomb indemnification for Solutions PCB cleanup costs hidden in SEC notes. Nick misses it, catches it late, bails at cost, shares halve after. We couldn't value it with certainty, he admits. That's humility. Munger's circle of competence bites hard. He's lucky to dodge the bullet, but he's not hiding the scar. Conseco, page 14, pops up later, December 2002, and it's uglier. A debt-heavy insurer files Chapter 11, shares tanked to near zero. Nick keeps them in the portfolio, no window dressing. Mistakes are inevitable, even desirable, he writes, page 14. He's not sugarcoating it. Full mea culpas in the Global Investment Review. This is gritty. Nick's showing the sausage gets made, blood and all. Page 137% of the funds in franchises, newspapers, racetracks, casinos, 27% in asset plays, 17% in workouts like Xerox. Aggregate discount, 51% of real worth, dollar bills for 51 cents. He riffs on Fred Schoid's Where Are the Customers' Yachts? Page 9. Sell-in booms, Buy and busts ignore the noise. Short-termers can't. They're chained to quarterly reports, terrified of missing the next tick. Imagine a stock guaranteed to tenfold next January. Short-termers wouldn't touch it if it's flat till then. He writes, page 10, that's the edge of time arbitrage. Estee Lauder drops 15% on a brand building spend. Page 10. Nick's like, they're punished for being smart. Markets are drunk on now. Nomad's sober for tomorrow. This is Nick and Zach in the trenches. Still cigar, but hunters, grabbing beat-up stuff like Xerox, learning from flops like Monsanto and Conseco. Page 13. Our edge is patience and the investor base that backs it. They're not a fund. They're a partnership, aligned for the long haul. It's Buffett snagging Geico cheap, ugly now, gold later, or Walton ignoring Wall Street to build Walmart store by store. Nick's scrapping, but the shift's brewing. He's eyeing quality, not just bargains. December 2002. Page 14. And the world's a mess. Messiai's down 19.9% for the year. Nomad's up 1.3%. Nick's not jazzed. Absolute returns rule, and 1.3% is meh, but he's pouncing. Cash drops from 20% to 5%. They're all in as panic peaks. For those with a long horizon, it's a good time to buy. He writes, page 15. Mispricings everywhere. Georgica Pelce's stock falls 6% on a rumor they debunk same day. Page 15. Investors are twitchy, shooting blind, and Nick's grinning. Act in haste, repent at leisure, he quips. Here's the pivot. Page 16. Stagecoach and Costco crash in, and Nick's brain rewires. Stagecoach. Page 17 is a UK bus giant that soared then cratered. Brian Souter, a conductor turned founder, rides deregulation in the 90s, starts at 20p in 93, hits 2.85 by 98, revenue up tenfold. He semi-retires, hands it off, and the new crew botches it. Debt-fueled Coach USA buy a sloppy roll-up of taxis and charters. Shares hit 10p by late 2002, half the IPO. Souter storms back, axes the US junk, refocuses on the UK bus, Cinderella, core. You need to keep the plates spinning, he growls. Page 17. Nick buys at 14p, pegs it at 60p, with a 12% yield while Souter rebuilds. Cancer surgery. Nick calls it nodding to Munger. Cut the rot, save the jewel. Think Bezos shedding Amazon's early flops to bet on AWS, or Rockefeller pruning Standard Oil's chaos into a monopoly. Page 18 is where Nick's mind explodes. Jim Sinegal's running this warehouse club. 35 billion revenue, 284 stores, with a 45 membership fee and a 14% markup cap. Easy to understand, hard to operate, Nick writes. Sinegal's a zealot. Buys jeans at 22, could gouge but sticks to 14%. If I let you break the contract once, you'll do it again, he snaps. Page 18. It's perpetual motion, low prices lock in customers, scale drive savings, savings cut prices more. This is Walmart's EDLP on steroids, Nick marvels. High-low pricing, 5 tissues, 1 week, $4 the next, confuses shoppers. Costco's transparent 14% above wholesale, period. Room for 1,000 US stores, 200 in the UK. Sinegal's compounding machine is just revving up. Page 15, 41% of the funds in difficult-to-copy franchises, Costco's the star. 31% in asset plays, hotels, casinos, 22% in workouts like Stagecoach. Half the portfolio's got insider buying or share repurchases, management's aligned. Page 16. 25 companies, 8 countries, 27% media, 23% hotels, 18% consumer goods. Nick's global focused and falling for businesses that don't need fixing. The fruits may not show for years, he writes. Page 13. That's the bet. Time turns good into great. This is Nick waking up. Stagecoach's grit, Costco's grace. Souter's a scrapper. Sinegal's a visionary. It's Buffett's leap from Berkshire's textile mills to See's candies. Cheap's fine, but quality that grows is king. Walton built Walmart brick by brick. Rockefeller scaled oil into an empire. Nick seeing the pattern. A cool head under pressure. He writes, page 15. Souter and Sinegal have it, and he's hitching Nomad to their wagons. December 2013, page 21, and Nomad's final numbers hit like a thunderclap. 9.1% since inception, 20% annualized pre-fees, 18.4% after. $10.21 SCIs, 2.176.5% a year. Nick's like, we didn't do this. Bezos, Sinegal, Buffett did. Page 2120. Your wealth's from employees serving customers. Nomad's just the surfboard, riding waves built by titans. Amazon's the monster. Nick's on Bezos early, pre-AWS when it's books and chaos. Page 2120. The success is theirs, not ours. Bezos reinvests every dime. Gross margins are razor thin, but scales exploding. By 2013, Amazon's a juggernaut. Nomad's ridden it from a $6 billion valuation to the stratosphere. This is Buffett buying Coke in '88. Spot a founder who sees decades out. Hold tight. Costco still humming. Sinegal's low-price gospel keeps compounding. Stagecoach stabilizes. Souter's surgery works. Zimbabwe, page 2 through, is Nick's wild card. Mid-2000s he's buying cement plants and breweries at 10-25 cents on the dollar amid hyperinflation. Exchange controls overvalue the Zimbabwean dollar. He sidesteps them, buys dual, listed stocks in Johannesburg, flips them in Harare. Scores 3 to 8-fold gains by 2013, dollars wired back to London. Not repeating that, he laughs. Page 215. Compounding beats chaos. Page 213, turnovers glacial, 20 letters per holding. They own forever. Amazon, Costco, a handful more. Nick riffs on psychology. Page 215. Barry Schwartz's paradox of choice. Markets throw 10,000 options at you daily, chasing them's misery. A Ferrari 250 GTO bought for $750 in the 60s just sold for $52 million. 20% a year for 50 years, he writes, page 216. Someone's always beating you short-term, ignore it. Mungers, sit on your ass investing. Patience trumps frenzy. This is the long game. 20% for 20 years isn't luck, it's a system. Find honest founders, Bezos Sinegal, running durable models, and let them cook. Page 2129. Riding waves isn't expensive. Management fees 10 basis points. They're not churning, they're compounding. Walton built Walmart store by store. Rockefeller turned oil into gold. Nick's channeling the DNA. The wealth's from the relationship with customers. He writes, page 212. It's not about picking stocks, it's about picking people. June 2014, page 3. Nick pens Buffett. We're closing Nomad. 13 years, $200 billion for clients, mostly charities. And they're out. Page 2818. Selling felt wrong, but we'd maxed the process. Regulations a beast. Page 203. 4 overseers. Rules up tenfold since 2001. The FCA's mandating nonsense. Separating risk from portfolio management. Dictating pay. This ain't Buffett's sunroom in Omaha. Nick sighs. Page 214. Consolidation's coming. Small shops like Nomad get crushed. It's fragile, he warns, echoing Taleb. But it's deeper. Page 220. Why had what we needed? A few killer businesses. Amazon. Costco. Enough cash and a new mission giving back. Nick's IGY Foundation, Zach's causes, they're redirecting gains. Past X amount. Meanings in reinvesting in society. They write, page 2. It's Buffett's giving pledge, but raw. They're mid-40s. Building while they can watch it play out. Winding up forced us to create something new, Nick says. Page 218. Selling sucks. Clients are gracious, but it's awkward. But the pull's independence and impact. Page 21. Good investing's rare. Good philanthropy's rarer. Join us. It's a gut punch. Capitalism's not about hoarding, it's about what you do with it. You don't have to change holdings with your underwear. They quip. Page 2. Funny, but profound. Stop flipping, start owning, then give it away. They're not retiring, they're rewiring the machine. This is Nick and Zach redefining winning. Start with value, Speedway, Maticon, pivot to compounding, Amazon, Costco, then pass the baton. Buffett, Walton, Bezos in one saga. The payoff can be extraordinary, but identity past X amount isn't the goal. They write, page 219. Wealth's a tool, not a trophy. Find the engine, ride it, build something that lasts. That's Nomad.